Hey guys, Lance Martin with the Martin Group and Cobalt Realty, powered by or brokered by EXP. It's going to take me a little while to get used to that, but if that's a surprise to you, you might have missed our market snapshot from last month, but we are no longer affiliated with Coldwell Banker and we have moved over to the EXP Realty brokerage. So a lot more to follow on that, but we're going to jump into our monthly market snapshot. Today is May 20th. We're a little bit behind schedule on this. And the setup's a little bit different, so bear with us over the next couple months as we kind of figure out how we're going to be reshooting these videos. We're in a new studio, which is a kind of a temporary studio. But nevertheless, here is our QR code, the same QR code we've been using forever. If you're watching this on YouTube or Instagram or Facebook, there is a link down below that has all the slides forever. So just go back and you can find those. So let's just go ahead and jump right in. As always, we are doing our Southern California market update. So we'll jump in with median price. I am going to do this a little bit differently. I've got a desk in front of me. Normally when I get to this screen, I say, hey, this is what's going on with median price, and then I'll point to this link here that says you can click in here and you can view this stuff on your own, which you can. Again, if you are watching this on any of the social medias or YouTube, there is a link below this. You have all the slides you can take a look at yourself. I don't know if anybody ever clicks in. Today, I'm actually going to click in and we're going to play through this a little bit, and I'll show you some of the stuff that's there, which I think is somewhat interesting. So getting to median price in the 4 counties that we track, if you just look at the chart, you can see basically all the counties are up. A little bit of dip month over month for the Riverside County, but LA, Orange, and San Bernardino County are up month over month. And frankly, LA and Orange County have kind of been on a tear the last few months in the positive direction, which is interesting. I don't know if I would have expected that. Where are we year over year? 2.3% up year over year for LA, 3.6% up in Orange County. Riverside County down ever so much, 0.7% in the negative direction. That's April to April of 2025. And then San Bernardino is perfectly flat. So what I thought I'd do though on price-wise, if you were to click into that chart, this is what you're gonna get, okay? So this is 15 years worth of data. And if you just hover your mouse over here, you'll basically see the prices will appear for month over month. We see these little dips. We saw this dip. We basically peaked. Well, let's just take LA and Riverside, or LA and Orange County. We basically peaked in June of last year. And if you roll your mouse across that, you'll see that the prices month over month, all the way up until December actually pulled back a little bit. That's actually not that unusual. It's not nearly as dramatic as what you'll see in Riverside, San Bernardino, but LA and Orange County is pretty obvious. And then what's happened, we basically have started refilling all of those property values that were eroded a little bit in the last 2 months or last 2 quarters of 2025 in the first 4 months of 2026. So as I click into a few more of these, this will become a little bit more obvious to you, and you'll basically see where we're at. Oops, I didn't want to do that. Let me try to get back to my deck. Maybe you should edit that out. But anyway, nevertheless, I just won't click into that again. So price is basically stable. As I've been saying for the last year, prices in the 4 counties that we track are just that. They're stable. Everything's fine. Nothing to worry about. Nothing to see here. Okay, new listings. What happened with new listings? These are brand new listings that came onto the market in the month of April. Again, you can click into the chart. Basically flat to almost non-existent. It's been a little bit of a rough window of time. So what does that mean? Down year over year in LA, 3%, not a whole heck of a lot, but Orange County, San Bernardino County, Riverside County, down double digits, 13% in Orange, 11% in Riverside, and 13% in San Bernardino County. Again, that's April to April. Orange, LA County, not nearly as severe, but nevertheless, it pulled back a little bit. But what does that mean as far as the actual listings themselves? These are new listings. This EKG, if you go back for 15 years and you click into that, let me pull this up a little bit, you can see a little bit better. You can see we're supposed to get new listings. Let's just go back to these peaks. When do these peaks? This is the part I wanted to point out. So this is May 20th. The numbers that we're looking at are for April. But if I go to these peaks, every single peak, that's May of 2024. This is the one we were just on a minute ago. That was May of 2025. I'll only focus on the blue county, which is LA County, but they all track within a month of one another. Let's skip the COVID years. Let's go back over here. What period is this? 2019, May. What year is this? 2018, May. What year is this? 2017, May. So the point I'm making is new listings tend to peak And by the way, the numbers I'm showing you are April, but they tend to peak in the month of May. You can go on some of these, and one might be June, one might be July, but generally speaking, it all tends to be around the same time. So what am I saying? Is the traditional season for new listings is basically here, okay? And actually almost gone, which is a little bit of a bummer, because if we were expecting some more inventory on the market, well, we're just not necessarily seeing it. But those are new listings. Let's take a look at all listings. So this is all listings in all 4 counties combined, and you can see the trend is upward a little bit. It's a little harder to see maybe on the screen. If I come over here though, even though month over month it's up, but all listings, total listings, LA, Orange, Riverside, San Bernardino, down 9%, down 20%, down 17%, down 13%. So what does it all mean? Well, let's take a look at the next chart over. This is the all listings combined. And again, maybe my setup's a little bit low here, but let me pull that screen up, we can see a little bit better. So here which by the way, let's go way back. I don't know that I want to compare to 2008, 2009, because those years were obviously a little crazy. Great recession, real estate collapsing, foreclosures all over the place. But when you take a look at this all listing chart here, again, we saw a little bit of improvement, but let's just go back to the peaks. Let's just go back 10 years ago. So let's go to 20. So I get a peak. By the way, it's a little bit different here. It's not necessarily going to be that May number for new listings. These are listings that have been on the market for an extended period of time, but normally it's somewhere between July, August, and September. So August is 2016 is when it peaked. We got another high one here that looks about August. That must have been 16. Yeah, that's or July of 16, September, August of 17. Here we are in 18, September of 18. So if you're a buyer or if you're a seller, even though there's not as many listings available coming, brand new listings to the market, they tend to peak. The inventory does tend to hold and build, and it tends to peak through the summer. So we should see some inventory build. We're kind of sort of seeing that here. But again, the numbers are still relatively low, nothing too crazy, nothing to get too excited about. But nevertheless, there's still got a lot of houses for sale. It's 10,000 homes for sale in LA County, almost 3,000 in Orange, 7,000 in Riverside, and 5,300 in San Bernardino. Okay, month supply. I'm not going to click into the chart for month supply, but the month supply, again, is relatively normal, but not compared to what we've seen in the last 4 or 5 years. 4 months in Riverside, actually 3.5, almost 3 in Orange, 4 exactly in Riverside, 4.3. Actually, I think I will go into this chart. So if you were to click into the month supply chart, which is here, again, take a look at where we are. Now, again, don't look at these high numbers. Those are crazy, but let's just go back a decade. So if we were to go back to 2016, fairly similar to where we are right now, a little bit higher. San Bernardino was the outlier at 7.4 months supply, but 3-4 months supply 10 years ago. Where are we today? Get my mouse there. 3.6, 2.7, and 4. So as far as the month supply is concerned, I don't have a problem with that. It seems fairly reasonable, certainly not giving me a whole heck of a lot of heartburn. Same thing with days on market. I won't click into that. You guys can if you want. But the number of days on market is basically between 1 and 2 months in the 4 counties that we're surveying. A lot more than it was 4 or 5 years ago. But 2 months supply of housing in these counties, nothing wrong with that at all. So that doesn't bug me at all. Oops, wrong slide. Where are we with pendings? This is always the pain point for me. The pending sales just continue to underperform. I will go ahead and show you the pending sales on our chart over here. And there she is. Again, look at these sales where we're down here in this lower right-hand corner. And again, if I go back 10 years ago to 2016, where we are, here's these peaks. This is going to be it right there. So there, in 2016, pending sales peaked in the month of March, which that's a little bit early, okay? But look where we are. There was, we'll just pick on LA County for the moment. 4,700 houses, buyers and sellers came together 10 years ago. And what's that number today? That number today is 2,700. So what is that? 40% decrease. So look at all of and this is why I wanted to click into the charts this time. If I click on every single one of these high marks, May. So in 2017, May was the most houses we sold. Let's go to the next one. This is going to be 2018. What month is that? May. What's this one? May. what's this one? July, okay, but that was 2020. That was a little weird. You can't really pay too much attention to 2020, 2021, and 2022 because those are the COVID years. But if you go back and you look at the rest of these, pending sales peaked in May. Well, this is May. Today's May 20th. Now, basically all I'm saying is we're not selling as many houses. If you're in my business, this has been a pain point. If you watch my snapshots for the last 3 or 4 years, certainly it's a pain point. What does it mean if you're a buyer or seller? It doesn't mean anything. It just means you might have a little bit harder time as far as finding the house you want as far as inventory is concerned. But we're certainly not selling a heck of a lot of houses. Now I did add, well actually let's take a look at what the numbers actually say. Down 10%, down 7%, down 8%, down 11% year over year. So we're selling less houses than we did a year ago. Surprise, surprise. It just seems to be the trend. This is new. I haven't added this before. I think this puts things a little bit more perspective because I've been looking at the pending sales kind of cratering. But the pending sales and the closed sales don't always track. And this might feel a little counterintuitive, but the closed sales in 3 of the 4 counties we track actually went up in the month of April. But they're still low in comparison. So what does that mean? Again, I thought we'd click in here one more time. So our closed sales are here. Let me zoom in. So if we get a little bit closer on the closed sales, and the main reason I'm doing this is I wanted to identify these spikes. Where are we? It's not going to probably, actually I did this earlier. I don't have it memorized. Let's just go back again. Let's just do 10 years ago. So there we are, 2016. Closed sales peaked in June. That's next month. Let's come over to the next high peak. When is that? June. When is the next one? June. When is this one? July. I think we might be getting into COVID here. Yeah, 2020 is weird. Again, we actually peaked. Is that nuts or what? In December of 2020, we sold more houses than any month in the entire year. That was COVID. That was just nuts. Never happened again until maybe the following year. What's this? Okay, guess what? 2021, we went back to normal, June. So why do I share all this with you? I'm just sharing with you for a couple reasons. Look how much higher these spikes are to where we are today. So when I say we're selling fewer homes, we're closing fewer homes, here it is. But I also wanted to get into this just to show you when the peaks are. So buyers and sellers and closings, the most of them normally will happen in the month of May or the month of June. We are in the month of May. We are in the month of June. So again, if you're a buyer, I'm not telling you to wait, but right now is the marketplace, but there's less people in the market in July, August, September, October. By the way, if you're a seller, there's less people in the market in July, August, September, October, November, December. So price your home right, talk to your real estate professional. If you don't have one, call me, I'll connect you with our team. So pricing is so important right now. But I wanted to log in here, if anything. I was actually thinking about changing the name of our real estate market snapshot to maybe the real estate market trends report, because really all we do here is we look at trends. These are the trends. So at any rate, getting back into the data, and by the way, I've got some reasons why I think all this is happening. Oh, let's look at the numbers, by the way. If you look at the closed sales, even though the pending sales for the prior month were off by double digits, LA's only down a little less than 2%. Orange County actually is up. We sold more homes and closed escrows in Orange County in April of 2026 than we did in April of 2025. So hey, there's a green shoot for us. 1.8% more. Riverside County down 3.4 and San Bernardino down 3.2. So again, we'll start to add a little bit more flavor to these. I pulled the Spotlight City of Riverside. I realized I hadn't done Riverside in a while. The main reason I just did that, I'm not going to click into these, although you guys can. If we go back one slide, you can click into all of these, have the exact same charts that I just pulled. This one's not clickable, but median price basically a 2% lower, so we dropped. Riverside 2.2%, April 2026 lower than April 2025. Is that a big deal? No. It's, we're chopping around here. It has chopped downward the last couple of months. It chopped down in March and April, but yeah, it is what it is. Where are we with active listings? Well, that tells a story. So forget about the Great Depression years, but here's 2010, 2012, about 1,000 units approximately in this neighborhood, which still wasn't a lot. And now we've got 489 houses for sale in the entire city of Riverside. As of April. Now again, that's 15.8% fewer than last year, but again, if you go back 10 years ago, well, that's 50, it looks like we had probably about 1,200 houses for sale in the city of Riverside 10 years ago. Now we got less than 500. So, it's a broken record, but that's what we're doing here. And again, Riverside did have a pretty nice little spike on closed sales. I don't know if that's an anomaly or something's happening, or they just had a good month. But Riverside did spike up in closed transactions in April. And by the way, that number was 7% more than a year ago. So, hey, we'll take it. When we get good news, we'll take it all day long. So that's our Riverside Market Snapshot. I just threw in this extra slide again earlier, in case you missed it. Yes, we've left Coldwell Banker. We're about a little less than 2 months from our departure. Nothing bad about Coldwell Banker. We had a great relationship for over 20 years. It was just time for us to change. Business model wasn't quite working the way we wanted it to, and we feel we're in a much better path with our EXP relationship. It gives us a little bit more virtual exposure, a little bit more of a hybrid model as opposed to the traditional. If you have any interest in that, we can talk about that offline or reach out to me. Having said that, this graphic is a little bit fuzzy, but our friends at T360 have reached, that's an industry thing, so if you're a consumer, you may not necessarily see too much about that. But our friends over at T360 have reached out and said, hey, let's go ahead and interview some agents and talk about what the new brokerage model looks like. So actually, they called me. I thought, oh, this is awesome. I'm going to get on a panel with T360. And they said, nope, we don't want anything to do with you old guys. We want the young kids. So Drew and Drake, or Drake or Drew, I'm not sure which or both, are going to basically be participating in this T360 panel. It is next week. I'll actually put a link to this in our link tree. So if you want to see what's going on with that, it's going to be one or both of the boys and who knows who else. They're not going to be by themselves. There'll be a few. So kind of a big deal, to be honest with you. T360 in our industries, no small thing. So I was pretty happy that they reached out to us. What's going on with interest rates? Which, by the way, everything that we're seeing on our marketplace is almost 100% driven by interest rates. We are back to 6.75%. What's going on? Well, what's going on is geopolitical affairs, war in Iran, oil prices, $7.50 diesel fuel. That's all you need to know. So all of that has just thrown a whole bunch of inflation concerns onto the marketplace, which took the 10-year Treasury bond up to 4.65%. This is as of today, May 20th. And when you have a 4.65% 10-year bond, what are you going to see with interest rates? You're going to see them escalate in the upward direction, and that's exactly what happened. I'm not a predictor of interest rates, but even if that bond doesn't change and it stays at 4.6, that rate very easily could be knocking back on 7% interest again. Gets us frozen, slows us down tremendously, and it is a problem. But it is what it is, so we can only just deal with what we've got. So what's my forecast? My forecast is basically unchanged. Flat, 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 flat. Our price is going to stay, I think they are, but by the way, if they're up 2%, I still say my forecast nailed it. If they're down 2%, I'll still say my forecast nailed it. Honestly, I wouldn't be surprised if we see rates increase and if we see sales volume continue to decrease, which means both of these numbers would be negative. Definitely don't want that, but it is what it is. We are also doing our monthly landlord update, landlord-tenant update, so keep an eye out for that if you're interested. We're also doing our homeowners association update. We actually just signed up another brand new homeowners association today, so we're excited about that. So you can find the links and see what's going on there. And that's all I got. So you guys have a wonderful May. Memorial Day is coming up, and I will see you in June.